Oil, a crucial energy commodity, in this case used to power a third of our energy needs. However, if we break that down and we take a look at what exactly it's used for, you can see a large part of it has to do with transportation, aviation, and even when it comes to industrials and petrochemicals, a relatively insignificant share when you look at the total, especially electricity, which is a very, very small amount. So in the current coronavirus storm, as households are hunkering down, not choosing to travel, whether it's domestically or even airline and going to other countries, and tourism in general, hospitality, events getting canceled, so on and so forth. All this results, obviously, in negative effects for oil, and we haven't even got to the part from an industrial standpoint. If there is going to be a slowdown in economic growth and supply chains getting disrupted, that too will influence oil demand. Now, if that's the case, we take a look at the chart, you can see negative, plenty of red days, especially as of late. WTI breaching 48 and to go into 47s this morning. It's priced below all its main moving averages. Technicals aren't as relevant in the current fundamental storm. However, if we take a look at it and we take a look at the overview, it is very volatile. Pivot points in both directions, whether to the upside or downside, at greater risk of breaking. What about sentiment? In this case, if we take a look at last Friday's COT, or Commitment of Traders report, you can see that they're holding an extreme long bias of 78%. IG client retail buy stands at 80% extreme long. So both of them in extreme long territory, pretty much the same, but how they got there differs drastically. In this case, if we map it onto the chart, blue dotted line for retail sentiment, green dotted line for COT, red line, which means if the dotted line goes below, the majority short, above means the majority long. And you can see in this case, COT traders holding an extreme long bias this entire period since we had that geopolitical shock in January, and they've actually reduced it from about 90% to the current 78%. Retail traders, on the other hand, they were majority short, but as the price dropped, took profit, initiated to the long side, some averaging into the long side, quite dangerous in the current scenario, and that's taken majority short bias in January to a now extreme long bias at 80%.